Alexander Green claims Nvidia relies on a $5 stock, and this investment is so good you could buy it and retire. In this video, I reveal the stock being pitched so you don't have to buy Green's newsletter. Before we do anything, let's investigate Green's latest stock picks to see how good he is. He recommended 7 stocks in June 2024 that he claimed could gain 100,000%, and the first was ARM Holdings. This stock has pretty much remained unchanged since. The second stock was Cloudflare, and this stock has done really well, almost tripling. The next stock was 10x Genomics, and this stock hasn't done well and has lost half its value. Symbotic was the next stock, and it's up a little bit since June 2024. CyberArk is the next stock, and it's done really well and has doubled since being recommended. CRISPR Therapeutics is next, and this stock has been flat since being recommended. UiPath was the last stock recommended, and it's up just a bit. Let's shift back to the new teaser now and see what Green is pitching. The headline reads, "The Single Stock Retirement Play. Here's why this $5 stock should be the cornerstone of your portfolio. I always hated penny stocks, until I discovered this hidden gem trading under a secret name." Here's what the email says that links to this presentation. While Wall Street obsesses over Nvidia's astronomical rise, they're missing the real story behind the AI revolution. You see, Nvidia doesn't actually manufacture their own AI servers. They design them, but someone else builds them. And that someone else is a $5 stock that's about to become the most important company you've never heard of. This manufacturing giant just announced they expect their AI server revenue to surpass their iPhone business within 2 years. We're talking about a company that already generates over $200 billion in annual sales, trading for pocket change. And the email finishes up by saying, while everyone's talking about Nvidia's record-breaking growth in AI, the real opportunity lies in the company manufacturing Nvidia's cutting-edge AI servers. This $5 tech powerhouse is the world's largest contract electronics manufacturer, makes most of Nvidia's systems, CEO's exact words, expects AI server revenue to reach $30+ billion this year. Projects server revenue to surpass its iPhone business within 2 years, has over 30,000 patents protecting its technology. Yet despite manufacturing the backbone of the AI revolution, it trades for just around $5 per share. I'm going to reveal the stock in 15 seconds, but before I do that, I want to remind you to sign up for my free report on the top 10 stocks to buy and hold forever. This report comes with no gimmicks, no get-rich-quick nonsense, just solid long-term investments you can actually feel confident owning. Click the link in the description to get your copy right now. The stock being pitched here is Foxconn, also known as On High Precision Industry, and you can buy this over the counter with the ticker HNHPF. Now you might be saying, I thought he said the stock was $5. Well, if you look at the email, it says this is Green's favorite stock for 2025. However, if you go to the presentation, you'll see it was created in 2022. I'm assuming Green still likes this stock if he's still running the promotion, but that explains the difference in stock price. Here's what to know about this stock, and after I'll tell you if I'd buy. On High Precision Industry, globally recognized as Foxconn Technology Group, stands as the world's largest electronics contract manufacturer. Founded in 1974 by Terry Gou in Taiwan, the company has evolved from a modest plastics manufacturer to a global technology powerhouse under current chairman Young Liu's leadership. Foxconn's strategic evolution reflects a steady transformation from basic manufacturing to cutting-edge innovation. Founded during the Foundation era, 1974 to 1988, as a plastics manufacturer, the company quickly transitioned into electrical components and expanded globally by establishing its first plant in Shenzhen, China. In the tech partnership growth phase, 2001 to 2012, Foxconn gained prominence by being selected by Intel for motherboard production, acquiring a stake in Sharp, and broadening its global manufacturing footprint. During the diversification phase, 2014 to 2020, it moved beyond electronics by acquiring telecom licenses in Taiwan and launching Foxtron, an electric vehicle venture in partnership with Yulon Group. Entering the AI and future tech era, 2023 to 2025, Foxconn has embraced advanced technologies, unveiling the Foxconn Genesis robotics platform and signing zero-emission vehicle partnerships with Mitsubishi Fuso, signaling its shift toward future-focused innovation. Foxconn has built a reputation for global manufacturing excellence, becoming the backbone of the consumer electronics industry. The company provides core manufacturing services and is responsible for producing about 40% of the world's consumer electronics, supplying leading brands such as Apple, Amazon, Google, Microsoft, Nintendo, and Sony. Its vast operational network spans 137 campuses in 24 countries and employs more than 767,000 people worldwide. Foxconn continues to expand strategically, with 3 new plants under construction in India aimed at creating 400,000 jobs by 2029, an additional $168 million investment in Mexico in 2025, and a growing presence in Brazil, Europe, and the United States. This global scale and strategic positioning cement Foxconn's role as a dominant force in electronics manufacturing. Foxconn's financial performance and growth demonstrate its ability to evolve beyond traditional manufacturing while capitalizing on emerging technology markets. In 2024, the company achieved record fourth-quarter revenue fueled by strong demand for AI servers, and by Q2 2025, it reported impressive quarter-over-quarter and year-over-year growth. In 2023, Foxconn generated 6.16 trillion new Taiwan dollars, or $198.53 billion in revenue, while its first-half 2025 net profit rose 52% year-over-year, underscoring robust financial momentum. The company has also made strategic investments, including a $1 billion commitment to AI products in August 2025, signaling its dedication to advancing in high-growth technology sectors. This trajectory highlights Foxconn's successful diversification and positions it for sustained expansion in AI and other cutting-edge markets while maintaining its core manufacturing strength. Foxconn's innovation leadership and industry recognition highlight its transformation into a technology-driven powerhouse. The company unveiled the Foxconn Genesis platform at Computex 2025, a groundbreaking robotics system designed to advance AI infrastructure and next-generation manufacturing automation. Its long-standing excellence has been recognized globally, earning the title of the world's largest EMS company for 14 consecutive years, along with prestigious honors such as Extel's 2025 Asia Equities Awards and the Investment Titan Award at Invest Karnataka 2025. Foxconn is also accelerating the electric vehicle ecosystem, forming strategic partnerships such as joint ventures with XSemi to advance semiconductor innovation, and with Mobility in Harmony to set open EV standards. With $1.54 billion invested in India and ongoing collaborations in AI data centers, the company continues to expand its technological footprint while aiming to create 400,000 jobs by 2029. Foxconn faces operational challenges and accountability concerns as it continues to scale its global operations. The company has faced ongoing allegations related to labor standards, including wage withholding, excessive overtime, and poor workplace conditions at some of its China facilities, particularly during peak production periods such as iPhone manufacturing. Additionally, global compliance issues have surfaced, with reports of discriminatory hiring practices at its India plants and past workplace incidents, including worker protests over living conditions and food safety. In response, Foxconn has denied these allegations while emphasizing its commitment to improving labor practices through increased automation, aimed at reducing workforce dependency and enhancing working conditions. Although the company remains under scrutiny, it is actively working to balance its rapid growth with stronger accountability and improved labor standards across its global network. So what do I think about this stock? Let's start with the good news. Foxconn's valuation looks fantastic. Its trailing PE ratio is around 17, which is cheap compared to many tech names. But there's a reason for that. Foxconn might have started in Taiwan, but a huge chunk of its operations are in mainland China, and that comes with baggage. A lot of investors simply don't feel comfortable owning Chinese-linked companies. The Chinese government can step in at any time with a new rule or regulation that slashes revenue and sends a stock tumbling overnight. Personally, I'm not against investing in some Chinese companies. I bought Tencent earlier this year, and it's up 60%. But here's the thing. Before I bought, Tencent had already dropped 60% in a flash after new government crackdowns. That's the reality with Chinese stocks. They're volatile. You can make good money, but the risk of sudden, policy-driven drops is real. You don't want to load your portfolio with too many of them. Foxconn is also a cyclical stock. For years, it bounced between $4 and $10. Now, thanks to huge demand for its AI servers, the stock's at all-time highs, over $14. No doubt, Foxconn is an impressive giant. But here's my take. I wouldn't buy it right now at these highs. Just 6 months ago, it was trading around $8 before this run. If history is any guide, a pullback could easily come, and that's when I'd consider stepping in. The company's great. The price? Not so much, at least today. And before you leave, make sure to click the link in the description for my free report on the top 10 stocks to buy and hold. These are companies I think you can buy and not worry about for a decade. And if you like the idea of buying Chinese stocks, you should click the video below. Shagalani is pitching a Chinese stock that I liked so much that I actually bought it.